Hello, welcome back to the weekly top 50 mutual funds analysis. This is Nataraja Upadhya. This analysis is for the week ending on May 31st, 2024. By the next week, we would have Indian results for the Lok Sabha very clear and probably the new government in place. So things are looking very positive from the exit poll. However, we are analyzing the performance through last week. So let's get into the detail. This is the summary across all fund types. If you notice that there has been a correction in the equity side, and therefore there has been a correction in the hybrid funds also. However, commodity funds, though they had a roller coaster ride, they ended up being positive for the last week. So as a result, if you notice, the top 50 funds on a 1 month basis gained an average of 10.21% for the last 1 month, which is impressive. And the equities alone gained only 6.28%. So the difference actually comes from the commodity funds. And if you notice, hybrid funds only gained 1.69%. And but if you look at the commodity funds, their monthly gain is 6.45% because there is some a churn out in the leadership here. So let us now look at the 1 year return. The annual leaders for 1 year return always have been equity funds, and they are 77.06%. So slightly subdued compared to a week back. And hybrid funds are at 33.60%, and commodity funds are at 22.91%, which is amazing for commodities. Let's now get into the details. These are the top 50 funds across all fund types. If you notice, a lot of commodity funds have taken the top positions, and only two funds, equity funds, have made it to green investment worthiness through last week, which is HDFC Defense Fund and Canara Robeco Infrastructure Fund, for having above average returns for all the timelines from 1 month to 1 year. The two commodity funds also made it to investment worthiness within the top 50 of across all fund types, which is amazing. They are Tata Silver ETF and Tata Silver ETF Fund of Fund. Because these are commodity funds, we should not get confused with the investments at par with the equity. So I have shown it in yellow. Now these are the bottom 50 funds based on 1 month return. You can see that last week most of them had correction, and all of them have negative returns for the last 1 month. And here we see a lot of technology funds, some foreign equity based funds here. So the bad time is not yet over for the technology or IT or digital or tech funds. So let's move on to top 50 leaders based on 1 year return. So CPSE ETF still maintains the top leadership position, and we have at least 3 funds above 100% return for the year, and the one that are in green, which are investment worthy for having returns better than top 50 average for all the timelines from 1 month to 1 year, are CPSE ETF, UNESCO India PSE Equity Fund, UNESCO India Infrastructure Fund, DSP India Tiger Fund, and LIC MF Infrastructure Fund. So the mutual funds are looking good, even from a 1 month and 1 year perspective. Now let us look at equities only, top 50 based on 1 month return. These are the funds that made investment worthiness for having better returns across all timelines from 1 month to 1 year. They are HDFC Defense Fund, Canara Robeco Infrastructure Fund, UNESCO India PSE Equity Fund, HSBC Infrastructure Fund, UNESCO India Infrastructure Fund, LIC Mutual Fund Infrastructure Fund, Bandhan Infrastructure Fund, DSP India Tiger Fund. Now, because of the very positive exit polls for the current government, there have been some speculations in the market as to what kind of investments will take off. And the typical recommendation is that power sector investments will catch up because of the India development story. So investments into power sector should be easy. Similarly, the infrastructure. So this is what is the general sentiment. So those who have already invested and are going to invest through this week, potentially will see better returns through infrastructure and power-based sector-based funds. Hope that helps. These are the bottom 50 based on 1 month return, just to see what kind of negative trend is going on. Most of them are thematic funds, even some pharma funds are there. Some bank ETFs are also there, which is surprising, especially private bank ETFs. Hopefully, these bank funds underperformance may change in the next 1 or 2 weeks. Let's see. Next, equity bottom 50 based on 1 year return. Again, here we have different types of funds here. Primarily, the debt funds, but a lot of IT funds and some specific foreign equity theme-based funds are also here. Let us move on to hybrid funds. Hybrid funds for those who feel it is too much risk to ride only with equity, and hybrid funds usually have some portion kept aside for low yielding debt funds, and they are expected to do better if the equity is correct. That is the theory, but my observation through this year is that hybrid funds the equity portion in the hybrid tends to correct equally or worse than equity funds, because equity funds are managed better, I would say. Hybrid funds seems to have some kind of a lull that when the equity is correct, we are the better choice, and that arrogance is impacting hybrid funds. So this is the correction week. Therefore, hybrid funds in terms of 1 month return, the highest return was 2.85, and it's subdued. But if you are a believer in hybrid funds, this list is useful. Investment worthy ones are Kotak Equity Hybrid Fund, HDFC Balanced Advantage Fund, HSBC Aggressive Hybrid Fund, Kotak Multi-Asset Allocation Fund, ICICI Prudential Retirement Fund Hybrid Aggressive Plan, Shriram Aggressive Hybrid Fund, Grow Aggressive Hybrid Fund, JM Aggressive Hybrid Fund, UNESCO India Aggressive Hybrid Fund, Kotak Multi-Asset Allocator Fund of Funds, and Bandhan Multi-Asset Allocator Fund of Fund. So you can see that typical their annual returns are around 30 to 40% here. Let us move on to top hybrid funds based on 1 year return. They also corrected through last week, so subdued returns. The highest one gave an annual return of 61.32, but it did not make it to investment worthiness because it's subpar performance in the short term. So the investment worthy ones are JM Aggressive Hybrid Fund, Quant Multi-Asset Fund, Bank of India Mid and Small Cap Equity and Debt Fund, ICICI Prudential Retirement Fund with Hybrid Aggressive Plan, ICICI Prudential Child Care Fund, that is GIFT Plan, HDFC Balanced Advantage Fund, SBI Magnum Children's Benefit Fund, Shriram Aggressive Hybrid Fund, Aditya Birla Sun Life Multi-Index Fund of Fund, UNESCO India Aggressive Hybrid Fund. So that is about the hybrid funds. Now we are coming into commodity funds. In commodity funds, whether you look at 1 month performance or 1 year performance, there has been a clear set of winners. So there is no discontinuity in green bars here. Okay. So all these funds made it to investment worthiness. And if you notice that only one of them corrected to the last week, and they gave a return of average something like almost like 16% for the month, which is amazing. And for the year, they are all above 25. And the top one is annual return is 31.80, which is HDFC Silver ETF. That is amazing. So the investment worthy ones are HDFC Silver ETF, Axis Silver ETF, Tata Silver ETF, UTS Silver ETF Fund of Fund, Aditya Birla Sun Life Silver ETF Fund of Fund, Nippon India Silver ETF Fund of Fund, ICICI Prudential Silver ETF FO, Aditya Birla Sun Life Silver ETF, ICICI Prudential Silver ETF, DSP Silver ETF, Nippon India Silver ETF, Kotak Silver ETF, Miro Asset Silver ETF, UTI Silver ETF, Edelweiss Silver ETF, HDFC Silver ETF Fund of Fund, Tata Silver ETF Fund of Fund, Kotak Silver ETF Fund of Fund, Axis Silver Fund of Fund, Edelweiss Gold and Silver ETF FOF. There are too many choices. but don't get lulled. Do not get into these white lines. While you have so many choices in the green line. So if you look at the 1 year, the leaders are similar. So I will not read out. So you, by looking at both 1 month leaders and 1 year leaders, and then the investment worthy ones marked in green, you have ample choices here. So I would say bit of a caution, because commodity funds will do well if the inflation persists and bothers, and war situations create a sense of insecurity. Otherwise, they tend to correct. So there is a good chance that as much they may go up, they may even correct in the near future. So your risk and reward may be equally balanced. So you may have better options in India by moving into equity from this point onwards. So watch out if you are already invested in commodity funds, but before taking fresh investments, because once you take a fresh investment, you would wait at least for 3 months or 6 months for it to give a decent return. By then correction happens, you will be disappointed. So be careful. So, there is a sense of maybe commodity funds have topped up by now. So that is the caution. With that, this bulletin is coming to an end. I don't discuss debt funds in detail. There is no point, because it is still not relevant for individual investors. You can always see my bulletins on various platforms of social network, and for details, my commentary will be available in my blog, Nax Fun Corner on the Blogger. See you next week. Thank you for your patience. Wish you all the best.